Good morning, my neighbors. Welcome to another episode of BYTTT. Before you take the trade, by all means, hit the like, subscribe, and the bell button, and that's enough plug for my taste. We are tardy to the party, so we're going to go right into the charts. So the first thing I want to go ahead and look at, it is not trade desk. We'll come back to that. It is NQ. What is going on, NQ? What are you doing with all this consolidation? Let's get rid of all these drawings so that way I don't confuse the crap out of y'all. All right, so we got a nice, interesting thing that, well, actually, let me bring that back. Let's bring these back. There's a reason why I have all these lines. The reason why I have all these lines is because there's a couple things that happen, especially with our opening range breakouts, and it kind of caused a lot of chaos. So if you were playing the opening range breakout, you probably got your face ripped off because you didn't draw your due diligence before. Now, I'm going to go ahead and take a little step back. If we look right here, right? If you do not have a strategy, by all means, copy my opening trade, opening range breakout. I'm sorry, having a blonde moment. The reason why I'm saying that it's such a big thing is because you got to have something that is proven, and a lot of traders actually run with that trade strategy because it's just easy and very simple rules. A lot of times you get a lot of volume, especially during the opening market. Now, the way you can build a strategy, if you don't want to do that, you got to get the statistics. Back testing is where you get the statistics. It could be as simple as the EMA crossing over at 11 a.m. versus the EMA crossing over at 1 p.m. Whatever you want to do. But the goal is get as much statistical data as possible so that way you can be able to find out how that will work. And if we look here on this chart, you'll see that we've had where opening ranges has given quite a bit, right? We had a full day of running up, but then you get these consolidation ones where they turn into dojis. Those can be really, really tricky. And then the other part of it is this. You got to have practice. That means you got to actually physically practice doing it in a real situation. In this, I say practice with paper trade. If you don't like to practice with paper trade, that is fine. But the goal is you want to practice with slow leverage so that way you don't force yourself into the market, so that way you can understand what is it that you're looking for, what is your muscle mechanics, what is the function of your trade strategy. These are the two things that you need before you can move to a trade bullpen and up your leverage and make money. If you're not doing these, you can't get here. So you shouldn't be trading with real money if you haven't done any practice and you have no statistics. If you're not, then you're gambling and just clicking buttons. Congratulations, you failed. On the other hand, if you are getting some good statistics, but then you don't practice enough, then you're just in Hobby Lobby or you're in Hopium where you're just going to fall off a cliff. And you're like, why does this not work? And then you're going to quit trading. I don't want you to be inside of here because it leads to quit chasm, or you're practicing, but you're practicing with no purpose and you overtrade in rapid fire and you're on an island with Wilson and you're like, come on, JD, can you save me? With no ID to get inside the club of being a profitable trader. That is the whole entire purpose. So as we go into this chart, let's talk about opening range breakouts. The opening range breakouts for the past couple of days has been very tricky. If you don't know what the opening range breakout, we try to keep it real simple. It is the first 15 minutes of the market opening. And when it happens, we take the bullish side and the bearish side, depending on if it breaks out the top or breaks out at the bottom. Let me go ahead and give you a nice little example of that. So yesterday's opening range breakout, let's get to 9:30. Where are you, 9:30? There you are. Boom, 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 boom. Right here. This green candle. So if we zoom in right here, we will take this low and this high. Right? We'll be bullish above here and we will be bearish below there. Very nice and simple. Right? And then the second rule to it is that we want to see the 5-minute break above that level. Because if the 5-minute breaks above here, then that means that's a 5-minute of accumulation and supporters going in that direction. It usually, again, this is not a guarantee you're going to make money. It is a high probability that you got enough support and you might be able to collect multiple 15 minutes so that way you can make some decent money. All right. So now you could kind of see we came, set our level, and they tried to get up there and they was like, nope, and they liquidated. that probably would scare the crap out of you. And if you did not wait for it to break below here and you started chasing, guess what? You were part of liquidation and it went right back up. This break right here, roughly around 10 o'clock, was when it finally broke through. I kind of took a piece of that. Then I kind of got a little greedy and tried to get a little bit more when it came into here because I knew the momentum was here. So I made a good chunk here, kind of got drawn down here, but I made it up with this move to the upside. So let's go ahead and look at the 5 minute, which brings me back to JD. Don't you always say you don't like to play in ranges? I don't like to play in ranges, but it just looked good at the moment. Gotta stay away from ranges. All right. That's just my rule, and I need to start following that thing. All right, anyway, so we got our low, got our highs right here, boom, boom. You see, nice little break. If you did not wait for the 5 minute to close above, guess what? Liquidated. So when this actually held its position, roughly around 10:05, this was a nice move to the upside. So even if you were taking it at this point, where is my drawings? Where are you? There we go. If you were at this point, you had about a drawdown of, that is not the level. Let's fix that again, right at the close. So about a 6-tick drawdown. And then it took off for about 138 ticks. That's a good trade. That's a really, really good trade. For my QQQ people, the ones that are playing options, right? Same thing, right? We have ourselves a nice little 15 minute. Let's grab that real quick. So that is this low. I'm on the wrong date anyway. Nope, I'm on the right date. All right. I'm trying not to go to the 15-minute chart. So we got 1985. So yeah. $9.30, about there. $9.40, about there, right? So same thing, bullish above here, bearish below here. Just want to put the label there, right? So you can see that same 5 minute, they broke out. Oh yeah, we out there, but you didn't wait for it to close. Lost money. Came back in. This is where people like to average down. Listen, I don't believe in average down. I think you're just asking for trouble because you can catch knives with averaging down. So I would suggest don't do that. But you can kind of see right around here, we kind of stair step, break right here. Boom. Solid move. You had a drawdown of about 4 cents. And then it took off for almost $1. And if you stayed into the trade and trailed it properly, you probably could have got about 2 deviations closer into the money. So that was the opening range breakout. But something happened. Something major happened. And I was like, why are we like stalling here? And I just said, you know what? I already made my money for the day. I'm not going to force anything. It looks like there is no volume in the market. So this right here, pullback, I stayed far away from. If you were late for your opening range breakout, you're probably going to look for anything in here looking for a break. Again, our simple rule is just a 5 minute close above. But watch what happened. I'll go to a 15-minute chart and I'll do it for NQ as well. Oops, don't want to move that. This is Friday, right? Friday's opening range breakout started at 9:50, 9:30 right there. So that means our low is right here and our high is right here. Let's go ahead and change these. We'll make this bullish above here and bearish below here. Interesting. So we had a 15-minute, and this is why sometimes it's good to kind of keep your levels around because you just don't know what the market's going to do. We had a opening range breakout. They did not break out to the top. So there was a massive sell-off that happened. That was our drop. And then when we opened around here, we made an opening range breakout as well. Look at that. I guess some news came in because we just did a nasty drop just now, right? So when that happened, they tried to get back up and also come back inside the opening range. Again, the opening range is a range, as in it's an area that people are looking for of taking their orders or getting out of their orders, whatever the case may be. Oh, we just got a market dominance. I'm going to break that down in a little bit if we get another alert. This area, I treat these ranges, that's why I don't like to play inside of them. I treat these ranges like order blocks. That's just how I look at them. So you could kind of see they try to break through here, and I did play a little bit of this before I left to the office. I tried to break in through this side. They didn't let it go, and then it started to come down. I made a small profit, got out the way because I knew this could be problems. This could be pressure, right? When we got into here, they tried one more time. What did it do? Double top. If you don't know what a double top is the one that kind of looks like the letter M. We had a nice little stroke up here, then we pushed back down, then they pushed it back up, and then they slammed it back down, and that's what we are on right now. Measure move for a M pattern is usually this area down to the center pivot. So that means our breakout would have been here, and I teach y'all not to take the whole entire position, so we try to take about 50% of the move, so that would have been roughly around this area. Oops, where did you go? You went too far. Right, roughly around this area. Look at that. In that area, we got a nice little block of price action here. We just got market dominance, and that happened fast. They are pushing this thing. All right, let's go ahead and check out NQ, and I'll break out what market dominance is. So the other way we trade is the market dominance. Market dominance is just a way I just say, hey, you know what? We just had a massive move. So it tries to anticipate what the market will do on the next candle. This is an estimate. It might not be exactly right, but if you follow the thesis, chances are you could get a nice little reversal trend or a nice little pop-up as people try to reposition, or it could be a complete reversal. So we'll see right here. So we got a 45-minute massive move, and it looked like they tried, and I showed y'all that when we was looking at that 15-minute on NQ. They just let it dump, and I'm going to show y'all what that looks like on the 5-minute. They try to get back up on yesterday's opening range. They try to hold it, use it as a block. They couldn't. It got up into this area. Looks like they're trying to buy it back up the dip, but we could put in a nice little fair value gap on the 45-minute here, because the 45-minute is anticipating a green candle here. Let's go ahead and look at the 5-minute. At the 5-minute, we had a massive drop. This was a 24-point drop on the 5-minute. Nice little push, and because of that, way too much momentum, especially here. There's got to be some type of profit taking. So I like to kind of draw trend lines here, and I usually wait for this 5-minute to kind of make a relative push to the upside, sometimes lower time frame. If we look at the 1-minute, that's the one that's making the push, versus the 5-minute is really starting to take off. So that said, I think, just not saying it's going to happen, I think this 45-minute only came for the 200, but if we throw a fib right on this 45-minute, we can get ourselves a nice little set of targets. Maybe they're going for the 50%. That's 21,707. Maybe they're going for the 618. That's 21,715. My alert system is actually designed to get to 236 and just take a small portion, because 9 times out of 10, if we get to 236 in reverse, it usually gets continuation and liquidate the buyers. So that's how market dominance kind of works, and that's what we kind of look for. But this thing is looking like it's really about to take off and get to that 618. We'll see what happens. All right. Kind of broke down how we kind of trade. We got about 27 minutes until the market opens up. So let's go ahead and run through some tickers. Let's go back to my earnings run list. Oh, look at Netflix. Netflix is not chilling at all. Look at this ticker. Look like we're down pre-market, but this thing is just still trugging along. I thought it was going to just stop at 1,000, get a nice little retracement into it, and then push up, but it's more like a slow drip here. Not saying for you to get into this thing, but if you were in back down here, your runners should look really, really lovely around this level. But yeah, I want to see this thing really cool down, maybe even test this block before I actually can trust that it's going to continue to the upside. Really, really good company though. Not saying that they're going to drop because they're going to drop. I just think I can't get in being that high. All right, we already talked about Meta. This one is interesting. I got this from a friend of mine. He met someone. I guess there is surgical robotics. It's called Intuitive Surgical. I've been always curious about it. They don't really do well on the options, so I'm just like watching it for the most part. But they had solid earnings just recently, and it's like they got a nice little push up here. So I kind of eyeballed this area. If they break above this, actually they kind of did. Did they break through? because I got an alert. Yeah. So I'm looking for them to break through this 595 to test this gap, and then they probably gonna get above 620. That's what it looks like to me. But to kind of give you an idea of who they are, this is their data. In provision of robotic assisted surgical solutions, invasive care. So that means they're actually doing cutting and all that through comprehensive ecosystem of products and services. So really, really interesting company. So if you want to see something into that AI robotics and all that stuff, this is probably one that y'all want to keep an eye on. Alcoa. Oof, don't want to touch that one right now. Not with Republicans in office. Amazon? Let's do Amazon. Come down to the monthly. Possible reversal, but this was a nice little massive move. Let's see if earnings was okay. I like it. Nothing really on the revenue, but the EPS tells me that they're managing with what they have. So I do think there's going to be a pullback for profit taking. I don't think they get back to 216. That's just my estimate. I don't think they get back to this level. I think there's going to catch a certain level here, and then we're going to put in another fair value gap. But again, the monthly stochastic is up here. But if we go over to the weekly, needs a cool down. If we go to the daily, cool down is almost over. So the question is, does it get under here? And that's the level that they're looking for, 225. Does it tap it? Do they do a sweep into like 223 and then take off? So I think I do like a nice cross up on the stochastic for Amazon, and that probably will make me take a small position if it actually does that. Oh, this does look like a channel. All right, what else we got? Reddit did pull back a little bit after its monster of a move after earnings. Actually, no, their earnings is not even released yet. Well, this is going to be interesting. I thought they had earnings already. This earnings is the one that kind of catapulted them. We got 320% on EPS. Not a lot of revenue. It's making money, but I think this is a little bit of FOMO that's driving this. I don't know. I don't feel this too much. Not for 224. Let me see shares afloat. 103 million. That's the reason. Maybe a little bit of a squeeze. I'm gonna have to check that option chain. Bear with me for a second. I'm curious about something. Let's see if they're in the middle of a gamma squeeze. If that's what's driving this. To kind of give you a little bit of an idea, gamma squeeze is when they run out of contracts for the options, and basically to get out of your position, it's almost like you're squeezing that chart. So now the broker has to make a decision on adding more or roles. Like there's just so many different ways that they can alleviate, or they just add more to the option chain. So I'm curious if they are in the middle of one. That could be the one that's driving it. See this option chain. And let me hide this so that I can show y'all that as well. All right. No, I don't think so. They got quite a few on the chain. Let's see the 21st. No, I don't think so. And it looked like there's some open interest that's been here. So yeah, I don't think it's a squeeze. Well, it stops at 320. Where is the stock now? Where are you? 220. Yeah. Okay, so it's not a gamma squeeze. So I think this is probably a little bit of FOMO. For me to be comfortable to try to play this, let's see. Let's come down. Oh, still don't know. It's either you were in before or you're not, because I'm not a proponent of buying high to sell higher. That's the monthly. Let's see what the weekly looks like. That's not what I want. Maybe that's the trend that they're on. And you can kind of see, look at that divergence, divergence, liquidated the divergence, curled up. If this doesn't take off above this weekly, this thing can cross down and liquidate all the more recent bulls. Very possible. And this is our daily. So yeah, I would say here, if this trend line breaks, we get a nice little solid bump and run. That should fall in line with earnings when it release. Actually, no, earnings is soon. It's in the next day or so. Let's see, this is 12 at night. So that'll be Thursday. So we'll probably get Thursday's action here. Depending on how they gap it, or if it just plays and consolidates, maybe we get a nice little pullback to 200. If it gets to 200, maybe that'll be the area to get a nice little bounce and continue to the upside, assuming that people are going to go ahead and reposition themselves. Might not make it all the way back to the high, about 230, but maybe you could get about 200 to 220. That probably would be the play. Actually, red list. I'm going to watch that. All right, what else we got? What else we got? I already did Disney a couple of times. Coinbase. Let's look at Coinbase. Kind of look like consolidation here. Let's look at the weekly. Yep. Kind of diamond pattern right here. Right at a support too. So probably going to need to look at this downward trend to break. We're kind of in the bump and run, but we didn't finish it. So it's kind of like in no man's land. Don't want to force anything. All right, so I would say maybe here. Let me put this as general. If it breaks below 265, it'll probably invalidate some of this pattern. But I'm anticipating that 265 never gets touched. And either here or here is going to be the reversal. I think we could give this level up, so I won't be aggressive. But if you're going to go with an aggressive entry, maybe a retest to 274. But the goal is for it to reset this oscillator on the daily. Their earnings is also on Thursday, so that means Friday night. So let's see how the earnings come about. And if it's solid, it might break right out of here. So this is probably just profit taking as people are getting out, knowing earnings is coming in, locking in their profits, and then they just go ahead and take this right back out to the upside. I will not be surprised that we get above 300 again on solid earnings. It's just, does the chart have enough of a reset? Let me see something. 2 hour. Yeah, 2 hour needs to pull back a little bit more. Yeah, so 274, 269. Get a nice little pullback without making the MACD go into the zero line. It might trigger a little bit of people are seeing what they see out of the earnings. Unless they do a sweep with a little bit of a bearish divergence here. I'm a bullish divergence on the 4 hour. That's the only thing I would say. But for the most part, this daily, nice curl, nice curl. This weekly, looks like we're getting a little bit of a reset, and this could curl in itself. But I think that reset will bring this stochastic to that lower register, which is a better spot for a stochastic. To give you an idea on a weekly, for example here, if it does a curl like this, yeah, you probably get something like that. But then you can see it led to a very, very interesting bearish divergence here. Higher high, lower highs, and then bang, it pulled back. They use that resistance, liquidated as much bulls that they can until they got into this lower register. Ever since that lower register, it pushed to that higher register here. There was a couple of shots at it, but it looked like they were looking for the level of 145. So if we curl here prematurely, this can cause problems for long-term holds. Might be a quick push, but it's probably best for us to wait till it gets into that lower register a little deeper. All right. We got 1 more minute. Let me give y'all one more. Home Depot. Let's do Home Depot. Let me get rid of this drawing. Let's see. I want to do this all the way back because they're a sound company and they always tend to kind of like drift up. So I'm going to go back. So this is the pandemic. Bang. Nice little upside here. We got a pivot right here, bang, bang. And then when we made this higher high, we have to look for another pivot. We'll call it that. And this is our all-time high on Home Depot. So let's go ahead and take that doji. I'm going to do that doji. I like dojis. I like doji order blocks. Shout out to Neo. Neo put me up on game. Appreciate you. I like doji order blocks. Call that an order block. Maybe get a nice little consolidation until we go sideways. Get a nice little support. Bang. Let's see what this earnings looks like. $3. Oh, they're forecasting lower. Maybe that's why we're consolidating. 38 billion. 39. They're forecasting that lower too. Let's see if it's a seasonality thing. Here's January last time. 2 billion. Yeah, it might be a seasonality thing because they lower EPS here versus here. And what January kind of brings in is that Christmas falls into that January. So maybe everybody's not doing home improvement during Christmas. So they're spending their money there, you know, Christmas gifts and stuff like that. And it looks like it picks back up around that summer. And it looks like their best quarter is like that June, summer as they report in July. So maybe a pullback. I would say maybe a pullback back into this trend. Then around May, that's when it's going to try to push back up and attempt to get new highs. If not, we might get ourselves a nice little solid bumper run, and a micro trend is required for a bumper run, and that could be our micro trend that is going to put pressure to the major trend, and then it works its way down into that side. So we will see how that goes. Let's look at the weekly real fast. If I get back over to NQ, weekly looks like we had a little bit of a bearish divergence here, hence the reason why we came down. Let's look at the daily. Daily is at its lower register already. Probably could attempt to break through up pre-market by a penny. But we are not here. We are here. And that usually means weaker uptrends. Let's take one as an example like we did before. Like this one. Uptrend. Yay, we should be going to the moon. Boom. Liquidate. Got into that lower register. That's what created more highs. But it didn't last long because they took a lot of smoke out of that bearish divergence. Dump. And then we got into that lower register until they accumulated. Didn't go nowhere. Came back to here. Accumulated again. And then boom. So I don't like this stochastic right here. I'm anticipating maybe a gap fill. Let's get back to 394, maybe 400, and test down here with a nice little sweep and then break out to the upside. So that is Home Depot. Their earnings is on the 25th. Oh, that's my phone. Don't want to talk to nobody. All right, we got ourselves 12 minutes into the market opens. Let's go ahead and get into NQ. I like to kind of do a nice little recap of what's going around in the market. Let's get rid of all these drawings. Consolidation, sideways candles. You like these things to kind of stack on top of each other like that. That's when you make money. That means it's trending. We're not getting that right now. Let's go to oil. Oil looks like it is. Might be doing a nice little rally. Only thing I don't like about oil, we are in this long term consolidation that started over in 2021, made new highs, and we came back here and it just basketball bounced it until when? Does it break out the bottom, break out the top? So I'm always looking at this as a consolidation zone. What else we got? We got gold. I was saying gold could get to 3,000. There's your baby. Looking good. 1, 2, 3, 4, 5, 6, 7 weeks of upside on gold. Yeesh. Get some gold. All right. Silver. It hasn't really broke out. It looks tired. Can the weight of silver bring this down if this trend line actually holds on this? What's this, monthly? No, this is my weekly. Micro trend to a major trend breakdown. Let's see. Let's put this here. Uptrend, uptrend, uptrend. I think this is the last uptrend. Yeah, that's the last uptrend. This is the pivot that they're looking for to hold, but they need to take out the highs here, and that will drag gold up. This is the micro trend that's putting pressure right there, and they use the backside to get us back up here. So this is going to be very interesting in the next couple of weeks, because we're just doing doji, doji, doji. Is this distribution or accumulation? We will see. This is the British pound. British pound, I was bearish below this level, and we are staying above it. This is probably going to put some weight to the market if it did fall down. But again, micro trend to beat major trends. There you go. This is kind of flattish. Let's get the other deviation. That'll be here. That'll be here. Actually, technically here. So we're slowly trying to break through here to go ahead and continue to that upside. Looking for the British pound to get above 1.25 for us to continue our bull run, because this will put pressure on the dollar. Natural gas, looks like we're rallying a little bit. I heard there's some snowstorms up north. If you're from up north, you could go ahead and chime in there. But supposedly there's going to be some snowstorms coming. I don't know. I mean, too much sunshine. We don't know what that is. But this is a nice little micro rally right here. Come on, get there. And this week is looking like they're building some strength. Let's see if they can take out this fair value gap, get back above 3.735. Here is the Russell. Russell is looking a little weakish. I don't like this. Look at the daily. Yeah. Maybe they're pulling cash out of the Russell. They might be pulling cash out of the Russell, and they're going to put that thing right back into major caps. If this thing starts to cross over the MACD coming down, this can be a little bit of a problem for the, domestic business. So we'll see what happens there. And then the infamous dollar. The dollar looks like they tried to rally it, but they dumped it back down. If the dollar loses value, it puts more pressure into domestic values as well. So that means we're going to go ahead and hit under this level, come down to this point. There is no fair value gap that we could attack until about 104, but you got a 50 EMA sitting right here. I don't like this stochastic doing a curl right here. So I will not be surprised we try to take one more stab to the upside, then kind of bear trap the bulls and then come down to the downside. That is a possibility. All right, so let's go ahead and warm up with some paper trade. Am I in my paper? I am in my paper. Let's warm up with, so Tuesdays, we try to warm up with our opening range breakout, so that way we can be sound. Don't let the carry over the weekend put some pressure to you. Nothing under the lines. And try to get us to understand that malleability of your mind and know what you're looking for and understand your strategy. Me, I'm very simple. We're looking for opening range breakouts. But if the opening range breakout was to be already here, I like to come down to like the 5 minute and the 1 minute and kind of scalp to kind of see how I would take my entries. This looks like a little bit of a downtrend that's starting to get ready to reverse. Got that. Got that. That. And that. So maybe something like that. Nice little bumpy de running. So we're gonna be patient a little bit. I want to see what this 5 minute, because this 5 minutes is just kind of sideways. Oh, you know what I forgot to do? I forgot to go over news with y'all. Right here. My FX book is one of my favorites. Let's go ahead and pull this bad boy up. Oh, yeah, I don't want none of that smoke. No. Everybody, stay in paper. If you do not have the skills to handle this, Fed Chair Powell is talking at 10 o'clock. If you don't know what 10 o'clock is, that's when we get on the future side. Other tickers is different. On the future side, we get a brand new 4 hour, brand new 2 hour, brand new 1 hour, brand new 30 minute, brand new 15 minute, brand new 5 minute, brand new 1 minute. We're gonna get a whole lot of time frames to recalibrate and recalculate at 10 o'clock. So do not, unless you just like to kind of get a little risky and throw money in the market, do not play around with Jay Powell talking testimony to Congress, because that can really move the market. It's mostly market reaction for the most part, but it can be very detrimental. So just be careful there. But that said, we're still going to go ahead and paper trade in the event that we could find ourselves an opportunity before it, and we're just going to have a little bit of fun today. Don't say it ain't so. Please don't say that, D-boy. Please tell me we could at least have a normal day. If, oh my God, and tomorrow. Oh, D-boy, why you gotta give me bad news? All right, so Jay Powell's talking. He's talking today and tomorrow, and there's CPI data tomorrow on top of that. Listen, okay, hold on. How can I explain this? There, Unc is bumping them. Yes, he is. He is bumping them gums, and he's gonna talk a whole lot of mad-ish. You already know he's probably gonna, especially Trump's in office too. So this is gonna be his first testimony, maybe even first speech since Trump in office. So that's gonna be even interesting. Is he gonna curb his words so that way he doesn't get fired by Trump? Like there's just so much to do in that. You know what? Let me go with this one. I was gonna go with a different one, but we're gonna go with this one here. Oh my God, yeah, this is not the time you want to kind of trade. Let me put this one away. Yeah, you go here. All right. So what I am going to break down to y'all is structural. Actually, you know what? Let me get both. I'm gonna do both, because the market is a storm. The market is a storm. That's the best way to say it, right? And you don't want to put yourself in a position where you're getting yourself completely wrapped up by the storm. So what I'm going to explain here is two things. And I've already did one part, so I'm going to do the second part in a little bit more detail. We're not going to talk about the chemical equation because we're not worrying about the trade per se. We're talking about this part right here. Market opportunity is always going to be bright and sunny, and there's going to be these opportunities always. It's how you react to the opportunities without getting yourself completely destroyed, because it might be sunny for an opportunity right now, and then while you're in the trade, a hurricane or a storm comes in and it liquidates your money. That's what this breaks down. So market showers can be for you or against you. So while you're watching the market, you're not in the market, you're inside of your structure patrol environment. That means you're watching the market, you're looking at your chart, you're drawing your trend lines. Let me get this out the way. You know what I'm saying? You're drawing your trend lines, you're looking, all right, I think this is a micro trend that's going to break this out here. Like, we're just watching here. It's the safest place you can be. You don't want to go ahead and just throw your money out and be like, I think it's going to do that. No, you need to know what the probability of success is going to be. You're not going to do that with your money in the market at the same time. So that's why the structure patrol environment is important. Just hang out in the window and be like, wow, I should have taken a trade live. That's okay, right? But when you see another opportunity that looks similar and it gives you an opportunity with high probability of success, you want to go in and be prepared for the showers. Now, how do you become prepared for the showers? This one's a little crude. I did say I was going to redo it, but I have yet to do this because there's just so much in here. Structural patrol environment. What should you take before you leave your structure environment? You got to get your foundation. That's your foundational boots. You have your monitor raincoat. You make sure that you can monitor what you see. And then you have to have your I don't give a fudge umbrella. Like, if it hits my stop loss, I'm okay. If it doesn't, I'm okay. I'm going to take my profits. That's what's going to make you successful. All right, so it looks like it's holding this trend line here. All right, get this out the way, and we'll go ahead and just focus on what's going on in the market. Again, I'm paper trading because Jay Powell's talking. So if you want to take this on a high risk, by all means, no problem. But we're just going to go ahead and enjoy this moment as this thing does look like, yeah, we get a nice little curl up. Look at that, bang. They're about to go into this level here. And see if we can get a little cool down of this oscillator. Maybe come in a little bit of this 1 minute candle, a bit somewhere around 7:15, somewhere around there. Get a nice little quick scalp here because I'm anticipating that the 5 minute, the party's just started. They're going to try to reset this at least upper parts of here because we've been deep in here, very deep. All right, the first minute is over. Let's start with, I would love to break out to this area here. And if we get a nice little flip up, very good there. And then if it gets here, I would love for it to get here. I think I would love for me to get a position in a little bit. This thing's ending like a doji. Not really a fan of that. Maybe one more pullback as long as it doesn't break this support. See if we can get in here. No spike throughs. Let's get a little pullback and then I'll jump in 1-on-1. I think it's gonna break through. I think you're gonna break through. Yep. Came, picked up the order. Let's see if we can get a nice little push up to the upside. I would get another one up here somewhere. My real target is this trend line right here, but if this thing just like echoes right through, the next rejection is probably going to be around here. My stop is like below here somewhere. I'm anticipating that it's not going to get there, as they're attempting to continue to push it up, but it's struggling. It is struggling. Again, there's a block right here, but I want this imbalance right here. Let's come up to the 5 minute. All right, they took my other contract. It can reject here, so I'm still that stop. Oh, there we go. That's the one. All right, I'm gonna take 2 off. I wanted to take 2 while it was at 600. I really wanted to do it at that. So I'm gonna still keep that 1 up here because I want to get past this 200 here. My stop loss is kind of like break even if they come through there. So far I locked in, to kind of give you an idea, I locked in 260. I would have locked in a lot more. So I'm kind of rolling with break even. This has been a rejection point at this 770. But if we can pick up this one more, I think we could get to 800 real easily. Actually, you know what? I'm gonna be a little greedy. Let's see what happens if it gets there. That's about 490, 500. We got a change of character that just happened. I think we're going to liquidate some. See if we can get a nice little massive move. I would love for it to just slam right through. I would take $100. That's probably what I would take. I would probably take $100, even though it says 455 here. Hey Neil, good morning. I didn't even see you there. But the prerequisite, I am a more seasoned trader. I operate a little differently. I play with mental stop losses. So that's it, since Neil's here. Stop losses is your friend, folks. Okay, so do not do what I do. Do put your stop loss where you think you need to put them. Okay, folks. All right. I operate differently. All right. Because anything can happen here. especially with J Powell. But we got a nice little solid bumper run. We broke out of that bumper run. I'm looking for it to get up into this upper register here. There will be a sense of a pullback. Yeah, because I know he's probably looking at his screen and he's just shaking his head like this guy here. Got to do the prerequisites. All right, we got like 10 minutes here before we establish our 15-minute opening range. So let me just go ahead and draw out the lines now while we're here. So I'll be bearish below this line right here, and I would be bullish above this line if this was the end of it. So that would be, come on, behave. Bullish above here, bearish below there. That is my goal. But of course, we're probably going to fly right through, which is what I'm thinking. Oh, we just picked up my second contract. I am willing to walk away with $400. So that is my stop on the, actually, at 400 is kind of close. 325. I'm willing to walk away with 325 if this thing liquidates all the way back down. I'm looking for them to pick up my second contract and fly right through. And then we could go, ooh, and there is a kick right here. Oh, man, this makes me really want to be greedy. I'm not going to lie. I probably would put 4 more right here if that was the case. But I won't be surprised we pull back because we're really vertical right now. So I won't, oh, or not. All right, I'm going to take 3 off when I see 1,000. Boom, got 1,000, taking 3. All right, so I would love for it to get up at that upper register. Would love. So that one was a good paper trade. It's locked in 838. I got 200 over on the board. I'm willing to get the break even on this one, and that will knock me relatively out. So basically, I'm risking 200. I pocketed enough money there. Don't you dare come to my break even when I say break even. Again, this is probably the most volatility we're going to probably see throughout today with J Powell. We're way close to 10 o'clock. That's why I am inside of this account of paper versus doing real money. Break even, I'm out. Good trade. Good trade. So these are the things that I kind of look for when I'm looking for a trade. And I'm looking for the opportunities. Some of them are different. Sometimes I'm looking for it on a daily, weekly, and all that stuff. Like I trade unorthodox. Yeah, I think I'm safe though because he hasn't chimed in, so I'm good to go. You see how they liquidate all the way back here? That's why I was okay with the break even. I think I'm safe though. I think he's like, completely ignored me, just chimed in mentally. But I'll probably get a text message later like, why are you not out there with a stop loss? Why are you doing that? But that was a solid move. I'm happy with it. I lost $2 there, but I made a total of 8 plus that, so that's 1,100 on paper right there. And to kind of come back a little bit, you don't have to really put a whole bunch of money inside of it, right? I do believe either you lower your leverage, because right now in our mindset class, we're in the month of February. We operate with a 10% leverage. So if you're normally trading with like 10 contracts, trade with 1 contract so that way you can get used to the process and you build those muscle memories. Because the muscle memory is the one that's going to go ahead and have you execute without hesitation. If you've ever told yourself like, oh man, right there, that's my entry, I would have took that one, or anything along the lines of those words, that means you do not trust your mechanics. That is not good. And when you're paper trading, there needs to be a purpose. So quickly kind of go through this. There is a purpose for paper trading. Right here is a way of doing that. I believe you need to paper trade with the purpose of building your skill development without any risk. I believe that you need to test strategies in paper trade and environment. I believe that you have to adapt to market changes. So paper trading when market changes, like AJ Powell, gives you those motions so that we can be able to operate properly. I believe you need to understand how to manage your emotions. And paper trading is a lot easier. If you hate losing, Try to win in paper trading before you start to use your real money. And yes, I was one of those individuals. I wish somebody told me this, because I paid a very hefty tuition to learn how to trade. All right, just to let y'all know. And then number 5, mastering your execution mechanics. Maybe your stop loss is supposed to be on the screen with a 40 tick stop loss. You need to know how to handle that. Maybe your EMA crossover is not when you enter. Maybe you need to practice that. This is where you master your mechanics. And then you got to have a track record so you can be able to have the statistics. Because again, if you don't know where you're going, you never know when you're going to end up where you're supposed to be. So this is a good way of tracking. And the last but not least, paper trading builds confidence. That is the hardest thing in the market. Having the, lack of better words, the cojones to actually hit the button when you think that it's not going to go their way. All right, it's probably not going to go my way, but it fits my strategy, and there's a high probability if it does this, then I'll do that. That's what you need to build, and you're only going to build that in paper trade. Out of all this whole entire thing, 1, skill, 3, adapt, 4, understand, 5, master. These 4 keeps you poised in the market, which is plan, observe, implement, study, and exits. Plan your 3 W's. Why are you looking? What is your entry? When do you get out? Observe. How is the plan? How is the trade working out? That is what we're looking for. As you notice, if we go back to this chart, look at what's happening. I said I'm out because it looks like we're going to have resistance at this level. But if it did break through with some massive move, I would love to get some more up here and fill the rest of this imbalance. That's planning, right? How is the plan working? It was coming to my break even. I am out. I got the money that I'm looking for. Hey, what it do? What it do? Salute. All right. I appreciate you. Right. And then the last one, implement. You got to execute. If you're not executing, then you're not doing nothing. All right. Study. Follow the flow of the trade. Is it doing that? It wasn't. I made my money and I chalked the deuces. And then exit is the implementation of that. I won't go into composure and break down the definition. Come to my mindset class. I really go really deep in depth on that. But that is how you can think in the market. That's how you stay safe. That's how you look at these charts with objectivity. You need to do this so you can make me money. And if you're not, you're fired. And that's how I treat my trades. All right, we got like 2 minutes left until we establish our opening range breakout. It looks like our top is going to be right about here. Did I get that right? Come on. Get there. There we go. Right. So that's our top, and we're going to be bearish below that level, which is right there. So we get in our range. I still like this bump and run. I will not be surprised before J Powell opens his mouth, or they might spike it again. Stick to your paper trade if you're going to try to trade, because this is going to get real shaky in the next 15 minutes. But a nice little break here, it probably spike right through into this area, because I do see this little area right here. That kick, that is what started the market this morning. I will not be, I'm sorry, last night. I will not be surprised if we get to 21,836, then reject and then dump all the way in and make lower lows. I would not be surprised. Not even close to being. But we're going to be patient. We let the market come to us, folks. We do not chase the market. Do not chase the cat. Do not chase the cat. All right, we got less than 60 seconds. And we're going to have an establishment of our highs and lows for our opening range. And I will try to stay in for the first 5-minute candle to see if we get a nice break above that side. Good trade, good trade. Oh, Lily's getting a little bit of a pullback. I think it needed it. That thing had a nice little move. Starbucks kind of sitting there. I really think Starbucks could get to 120. Microsoft is fighting to build. You remember that base I told y'all during the, for those that was here earlier, 410? Yep. That's that 410 level. They're struggling. Netflix is giving back. What else is in this list? Clorox is just standing there. All right. Got a market dominance, we might get a little bit of a pullback. Let's see what this 5 minute does. If this 5 minute, oh, we're already trending down. If I was being risky, I would do something along the lines of, because of market dominance, do a sell here with a stop right at the structure here. So risk it about $200 to see if it's going to give me that sell off. About here. But we have a lot of momentum, so I would not be surprised they hit the stop. But that's what I will be looking for. That it doesn't make any more higher highs, and then it just kind of does its dump. The theory behind it is that the 45-minute has made a very massive move up, and we anticipate a potential red candle to happen as they establish their fair value gap. It might not do it, but we'll see. Again, we're still looking for opening range breakout, which is the 5-minute closing above this level. So it is a bit of a conflict of theses. It look like they're accumulating to try to break out. Oh, might be working out. Might work out. Let's see, where could we go? Let's just drop a fib on it. Could we get to 50%? Man, that's being aggressive. I would say the 236 is what I'm looking for, so maybe a nice little target. Come on, behave. A nice little target. Come on, behave. All right, I'll put it like this. Sell limit, and I want about right here. About a 2-to-1 ratio, give or take usually. We'll see if it gives it to me. So I'm risking about, oh, I forgot. I'm on paper. I can just do it like this. So I'm risking $215 to make $385. Are you happy, Neo? I put a stop loss. RTX. Let's see what RTX. That's Raytheon, if I'm not mistaken, right? Oh, they changed their name to RTX company? It might be at a discount zone. Might be. A little choppy though for my liking. If this stock can pull up. Still bullish. Dividends is on the 21st. That can be a little tricky. Earnings just dropped. This was 2 weeks ago. Yeah, end of January. Yeah, so it gapped up today, and they're trying to fill the gap. If it gives up this 128, then I would love to wait till that stochastic actually comes back and cross again. And when that stochastic crosses again, that could be the momentum to reopen this up. But that MACD is already trying to show some weakness. Oof. You got a daily bearish divergence too. So whatever reset, they could come back and get all the bulls. Might be getting ready for a bear trap. But I do like the upside on this one. Had a nice hidden bullish. That's the one that gave you that gap. Yeah, I would say more upside, but that oscillator needs to reset. Maybe even give me another curl back to the upside on the MACD. Establish maybe 125 as the level. And never go below. Maybe 125, 124. That way I can use this gap. All right, let's go back to NQ. Let's see. Did we get the 5 minute to cross back up? No, it looked like they're taking their sweet time. It didn't even hit my stop either. Could I get what I want? We got 24 seconds to this 5 minutes is over. Oh, I might get it. Come on, show me 385. Because it's such a counter trend, and if I was playing with real money, I would trail it a little tight, knowing that at the end I am in the middle of a counter trend. But since we're on paper, we're gonna go ahead and let this ride. Give it a couple more minutes. So we got our highs and lows. So our opening range, 21,796.50 and 21,700, basically 100 points. 21,700 is our lower point. We break out of either one of those, the accumulation of the range should give you some real good price movement for a good opening range breakout. So put that on your charts. If you're on the Qs, let's go over to the Qs for my option traders. If you're on the Qs, then you're looking for, did I already do this? Let me just drag this one. I'm gonna use this one anyways. If you're on the Qs, 15 minutes. Still the same. All right. If you're in the Qs, then you're looking for bullish above 528.15. I would love to target around the 529, maybe even get into the 530, because the 529, that's your M pattern. If you get down to the downside, taking out this candle is monument. So I would say 525 would be a good contract, and then it just dumps all the way into a clear dump cycle. But we'll see how that goes. Last thing before I get out of here, let's see what is the update on this. I'm at 155, 185. It's just doing a dance back and forth. I don't know if they're going to give me the 385, but I do have to run. Normally I do a hard stop at 945, but today I did a little bit longer because it did give us some solid moves. Again, it could get back up into that upper register, which it look like it's pulling back. But the goal is 5-minute close above is what we're looking for. That's what we want, so that way we can play this to the upside, maybe get the rest of this bump and run. If it does not, everybody that was thinking the same thesis as us is probably going to go ahead and enjoy a nice break of structure and continue to the downside all the way down to maybe 21,591. Let's look left. Yeah, probably take some of this imbalance that's here and play it down. We'll see. Oh, they hit my stop right there. Let's see. They hit my stop on my paper. I'll hang out with y'all for 2 more minutes. Let's see if we can see if they break this down. Again, J Powell starts at 10 o'clock. Stick on paper. That way you can experience the J Powell, right? Like the way he kind of kicks in J Powell the market, without actually taking any of the risk of how much volatility that can come in. I think they probably came in for a quick little liquidation sweep, knowing that they were going to go down. But I've yet to hit my alert yet. I think my alert only told me about the entry. Yep, short condition met, but I haven't got one for close off yet. Yeah, that 5-minute does look bullish, but it's tired. Let's get at 136, we get a close above. That's what we would be looking for. And then I'll leave y'all with that. All right, we got 1 minute and 16 seconds. Let's take this fib out. I don't think we're gonna need that right now. Yeah, I think they might have just swept that. It might have been quick little manipulation. Take me out, take out everybody that was above that, and then still come back down with the momentum and break the structure on the internal. Right here at 21,768. All right, you see? It could be all the way to the end of the afternoon. It might be 1 o'clock, 2 o'clock when we get a 5-minute candle that closes above this level. Right now, looks like it's not going to do so. It could just play inside of this range with a little bit of this, and then out of nowhere find some support and then just takes off. And then that'll be your 5-minute that kind of goes off right here. Where are you? I'm in the wrong thing. Ghost bars. I like ghost bars, right? Nice little trend that kind of goes like this, and then it stays above there It might bull flag, bear flag, or whatever the case may be, but you want to have, very important, a 5-minute candle that breaks above, and that doji right there is an example of one that can, oh, really, don't be difficult. It's being difficult because it's too close. That doji right here could be a nice little break. That's what we want to see. May retrace, have a stop loss hit. They did go to my level. You jerks. Like I said, it was a sweep for the boom, and then it just took the target down to the 236. Anyways, that's it. That was fun. I appreciate everyone that chimed in. I will be back on again at 8:15 tomorrow, and we go ahead and continue this on. If you don't have a broker that you trade futures with, the link down below, I got elite links right there. You could save as much as 90% depending on what sales that they have. Also, my one-on-ones, you can book my one-on-ones. They're open. The link tree is right down below. Don't forget to hit the like, subscribe, and the bell button, and I will see you tomorrow at 8:15. Good luck, everyone. Bye-bye.